To this now, insurers have already paid billions of rands in death claims in the first 3 months of this year as a result of COVID-19, and Sanlam has raised concern about a worse-than-expected third wave. Now, the insurers' benchmark survey, a yearly analysis of local retirement fund the local retirement fund industry, shows COVID-19 has severely affected savings in the country. I want to bring in Avishal Seeth, head of Sanlam Umbrella Solutions, to talk to us about that. Avishal, good evening. Thanks for talking to us. We'll get to retirement savings in a moment, but I want to bring in this. Sanlam paying just under 4 billion rand in death claims in the first quarter. How is Sanlam reading what is happening potentially with this third wave? A lot of concerns around this.
Thanks, Devan, and thanks for having me here. Look, I think there was expectation that the third wave wouldn't be as severe as the second wave. And I think what we're seeing now is that that expectation isn't being met. We were hoping that there would be some kind of population immunity after the severity of the second wave and the number of people that were actually affected. But it does look like the third wave is tracking very closely to what the second wave was, and in Gauteng we know that it's already exceeded the peak of the second wave, and it looks like it's going to continue to go worse. So we're watching with bated breath what happens over the next couple of weeks, because that's going to determine what's going to happen from an insurance perspective over the next year.
And it's interesting because that survey being released, we know that South Africa already has a lack of adequate retirement savings among employees. That was even before COVID-19. So what did this latest survey say about the impact of COVID on retirement savings? The picture doesn't look good, does it?
Absolutely, Devan. Look, I mean, what we do know is that, and we tend to forget this because a lot has happened over the past year or 18 months, the South African economy was actually in not a strong position prior to the pandemic hitting us. And the pandemic hit us, and unfortunately many businesses have suffered as a result. And with these businesses suffering, many were forced to close down, many were forced to retrench, which increased our levels of unemployment. We know that youth unemployment is at unsustainable levels, 60% Stats SA reported this year. And unfortunately, businesses have actually had to start looking at suspending contributions to retirement savings, simply to remain operational, and also just to make sure that they can make sure that their employees can take some money home and put food on the table, because immediate needs are definitely greater than the needs for retirement. What we do know is that over the next just 6 months of reduction in contributions isn't going to have a massive effect on your retirement outcome.
But it is interesting to see the type of sectors and the groupings that have sort of pulled back contributions. Yeah. I mean, among them, the unions, for example. I mean, that's a huge amount of money that they make contributions-wise, is it?
100%, Devan. I think so. We interviewed and surveyed 10 union funds this year as part of the survey, and they accounted for just over 500,000 members and over 100 billion rand in assets. So still a substantial proportion of the total retirement sector. And many of them confirm that they're actually increasing the duration of suspensions to about a year, which is a substantial period compared to the average of the rest of the retirement industry.
Yeah, well, we hope it does get better. Well, thanks very much indeed. Avishal Seeth from Sanlam's Umbrella Solutions. They're talking to